Good afternoon, everyone. Thank you for joining us. Appreciate you taking an hour out of your afternoon to join us for this webinar on loan forgiveness. I'm Dan Massey. I'm a partner with the Walz Group in our assurance department. Joining me is Ben Rittenauer. He's a manager in our assurance department, and together we'll be tag teaming this to present basically the next round of information on the PPP loans. The Paycheck Protection Program, which was part of the CARES Act that was signed into law on March 27th of this year, so about 2.5 weeks ago, went through the Senate and stayed there for a little bit, then went to House, and then the President signed it on the 27th. So the CARES Act in general is over 800 pages, but the part that is really the most popular and has the most immediacy for businesses, small businesses right now, is the first part of the law, which is the Paycheck Protection Program, also called PPP. Many of you who are listening to this have probably already applied, are thinking about applying. Maybe some of you have even been funded with loans up to $10 million. So we're not going to talk a whole lot about the application process or anything like that. We're going to talk more about the forgiveness portion of this, because this isn't just a loan, a typical loan that's provided. There's an opportunity to not have to pay back any of that loan. It's really the most attractive feature of the entire program, but there's a lot of questions about what that looks like. So we want to try to shed some light on that to the extent possible. So go through an outline here. What we're going to talk about today is we're going to talk about some caveats. We have as many answers as we think we can possibly have, but there's a lot of areas that are unclear. So we're going to give you just some warnings about everything that we're giving and how you can use that information to the best of your ability. We wanted to get things out to you as quickly as possible because we know you have questions, but we want you to just be cautious about and aware of what we know and what is still unknown. So Ben will go through those caveats shortly. I also want to talk about the forgivable uses of the PPP loan, so what you can use your loan proceeds for. That's very important. We'll discuss that. Also want to discuss how to calculate the forgiveness. That's pretty much the biggest component of this. Most people say, okay, well, I've got a loan. How do I know how much is going to be forgiven? We'll walk through that. We'll talk about some things that you can do to plan now before the forgiveness period even starts. We'll talk about, again, we'll emphasize areas that are unclear in the law so that you can navigate those and be prepared to respond as those are clarified. We also want to talk to you about how we can continue to help you. I know many of the people on the call here, we possibly have helped walk through the application process. Maybe we looked at the application before you sent it in. May provide some spreadsheets to help you pull things together. If we did your payroll, we certainly provide some payroll reports. So we're really thankful that we can help you through this process. I want to talk about ways that we can continue to be a resource for you, because we recognize that this is a difficult time for you and your business, and that there's many of you who are hurting here and need these funds and really would like them to be forgiven. So we definitely want to be able to help. We'll also have a question and answer session at the end. You're welcome to send questions in throughout the presentation. There's a question and answer tab at the bottom of your screen there. Certainly feel free to send things in, and we'll respond to those as we can. Some of them will respond throughout the presentation. Others we'll talk about at the end, but certainly don't hesitate to send anything you have in. Also want to let you know that we will have this PowerPoint presentation will be made available to you as well as it's being recorded. So it should also be available online in some manner for you to look at, especially if you've got other members of your team who or organization weren't able to attend during this exact time slot. We'll be able to get the information out to you for you to share with them. So without any further ado, I'm going to turn it over to Ben so that he can talk about some of the caveats as well as the forgivable uses of the PPP loan.
Hi, Dan. Thank you for the introduction. I want to reiterate Dan's sentiments of gratitude for your attendance today. I hope you can find the time to be valuable, have some takeaways that you can apply to your business, and hopefully allow you to handle your loan proceeds with success in a way that is impactful for you long term. The vast majority of the information that we pulled together for this presentation was based off of information that was available mid last week. So it is currently April 14th. So information around April 7th, April 8th. Practically speaking, there really has not been much to any change as it relates to forgiveness since then. So we feel that this information is still very timely. It is still very useful as we know it today. So we have three key pieces of information that we are pulling from, three key sources, that being the actual CARES Act that is available to us, HR 748, that is largely available online, widely available online. It is the 880-page document Dan referred to, but as he mentioned, the part that actually relates to the PPP loans is significantly less than that 880 pages, is closer to 40 pages. We also have been utilizing the SBA back on April the 2nd, issued their interim final guidance relating to the PPP loans. That document did address forgiveness. It did not address forgiveness to a large degree. It touched on it, but it was primarily focused on the loan and the loan application process. It did mention, though, that additional information relating to forgiveness will be coming. It did not say when it would be coming. The Act says that, the CARES Act says that information will be provided within 30 days of the Act being signed. So if the Act was signed on March 27th, I would anticipate we have solid information relating to forgiveness by April the 26th. Acknowledging that is 2 weeks from now, and if you have already received your loan proceeds, you could be 2 to 3 weeks into this 8-week period we will be talking about. And I acknowledge and realize that it would be nice to have that information now. I go back and forth in my mind about whether I would prefer to have incomplete information now, or what I hope to be should be very good information when it does come out, because they have taken the additional time. The third source of information we have looked at and have been following is the Treasury has been updating a frequently asked questions document either daily or every other day for the past approximately week. So if you would go to Google and you Google Treasury Paycheck Protection Program facts, you could get there. And I believe the one I looked at today, again, it is April the 14th, that had been updated through the April the 13th. And they have been continuing to update that. And the only thing really that changes is another question gets added to the bottom, and the date that it was updated through changes up top. We have pulled together some tools for your use. Those include 2 Excel spreadsheets. One is a simple version, one is a detailed version. We have also pulled together what we believe covers the vast majority of the content available to us relating to the loan forgiveness, and I've called that our talking points. That is relatively detailed. It is relatively in-depth. We tried to do a simple version, and in the end, it wasn't much shorter than the detailed version, and we kind of came to the conclusion that this is just a very detailed topic. So to try to cut corners really wasn't doing anybody any favors, so we kept with just one detailed Word document that you can use. Another caveat, as we work through this calculation, as we work through this topic, and this applies to the spreadsheets and the Word document as well, we are not going into every conceivable scenario. It's impossible to do so. There are countless what-if scenarios. How should I handle this? What can I do this? Can I do this? That they cannot all be addressed based off of the information that we have. And even if we had all the information, it would be difficult to address them. So I think a lot of the conceivable scenarios will be addressed when additional guidance comes. What isn't addressed is where we will have to start going into some gray areas and thinking about, okay, this is our guidance. How do I interpret it and how do I try to apply it? Acknowledging that whatever we submit for forgiveness will be reviewed and there could be pushback. So there's a lot of additional clarification needed. We expect that to be coming. With that said, we do not know what that will be or when. Last thing I want to touch on this side is forgivable uses versus allowable uses. The forgivable uses and allowable uses, the uses is essentially the same between the two options, between the two scenarios. So the uses is pretty much the same. There is a slight difference, but not very much. What is a key differentiator is what is forgivable and what is allowable, and that is all predicated based off of what time that usage occurred. So the forgivable uses are the 8-week period following the loan receipt. So you receive the loan today on April the 14th, and the forgivable uses is the uses that you incurred during the 8 weeks following today. That is contrasted with the allowable uses where the covered period is February 15 through June 30. So if we use the example that, let's say today you get $1 million PPP loan, and as you work through these calculations, as you calculate the uses between February 15 and June 30, you spend $800,000 of that $1 million loans on approvable expenditures, what would be called allowed. Then let's look at it and say, out of that $800,000, $300,000 were spent during the 8-week period for which it is forgivable. So you have $500,000 outside of the 8 weeks, and you have $300,000 within that 8-week period to make up the $800,000 of spend. Practically speaking, the $500,000, it's perfectly okay that you use the loan proceeds for that. It just won't be forgiven. That will be rolled into another loan. Additionally, whatever portion of those $300,000 of forgivable expenses that do not end up being forgiven, Dan, as we move forward from here, will be talking about how to calculate that loan forgiveness. And you could have out of that $300,000, let's say $200,000 of it is actually forgivable. So with that, you end up with $200,000 of the $1 million loan being forgiven. You have a $600,000 loan that needs to be repaid over the next 2 years. And then you have $200,000 that you didn't use for an allowable use during the allowable time period that, practically speaking, could be demanded to be repaid essentially immediately whenever that request would become. Because I think they're going to take the position that if we gave it to you and you didn't spend it for what we told you could spend it on, then you should have it available to give it back to us. So as we talk about forgivable and allowable uses, be thinking about those time periods, whether that the forgivable piece being the 8 weeks after you receive the loan, or the allowable uses, which is February 15 through June 30. So as we said, forgivable is the 8 weeks. It is the costs that you incur, and we'll go through what those eligible costs are, but they must be incurred and payments made. The Act says that during that 8-week period, costs that are incurred and payments made are eligible for forgiveness. Now, what I want you to do, my wife is a teacher and she uses the phrase with her students to focus their eyes. Focus on this, because I want you to read costs incurred and payments made. It is easy for your eyes to glance over that and say, okay, that's easy. What I would challenge you with is incurring 8 weeks of costs is going to be easy. Incurring 8 weeks of payroll is going to be easy. What is going to be difficult, unless they come out with a different mechanism to allow this to be done differently, is paying for that 8 weeks within the same 8-week period. So if you think about it, you incur 8 weeks of payroll, but you pay bi-weekly. It is reasonable to expect that you could only pay for 6 or 7 of those weeks during that 8-week period. So we want you to be thinking about, and we'll touch on this later, how can we make sure that we are paying for these 8 weeks in the same period that they are incurred? So allowable uses. The first allowable use is payroll and related costs. Very practically speaking, very factually, this is the same payroll and related costs that you utilize to calculate your maximum loan amount with your application. So it is your gross wages, it is your retirement benefits, your gross wages up to 100,000 a year prorated, your retirement benefits, your group healthcare benefits, your PA unemployment taxes. We're here in Pennsylvania. So practically speaking, it is state and local taxes assessed on the payroll, which for Pennsylvania, it's pretty much just your unemployment taxes. There may be some additional taxes outside of Pennsylvania that would apply, but by and large, that's what we're focusing on. If you think about for the 8-week period, we are going in with the mindset that $100,000 is prorated to approximately 15,000. For those of you that enjoy math, that is 8 weeks divided by 52 weeks times 100,000 gets you to 15,385. Practically speaking, 52 weeks is only 364 days. So you could argue that this would be a little bit smaller if you used 56 divided by 365, or in this instance, because it's 2020, there's 366 days in the leap year. So 15,385 is what we are using for our purposes, acknowledging that it might be a little different. But if you look at it from a perspective that the maximum amount of forgiveness you will be able to get for any one individual relating to their gross wages is approximately $15,000. So even if you pay somebody $20,000 during that period, you're only going to get 15,000 of it forgiven. Additionally, and this is different than the loan application, you are also allowed to utilize the loan proceeds for occupancy costs and interest. Occupancy costs are rent under a lease agreement that was in place as of February 15. It is also interest on debt that is mortgages on real or personal property that were in place as of February 15, 2020. It's also utilities, water, gas, electric, telephone, internet. So I can look at those and my mind can immediately start to think about, well, what about this? Can I include this? Can I include this? Can I include this? What I encourage you, keep thinking about those. I think the information will come in terms of what we can include. I think additional information will come in terms of what we can and cannot include underneath those umbrellas. But be thinking about, how do I plan to make sure that I am getting those paid, that I have the ducks in a row so that I at least get 8 weeks of payments for whatever we can include under those buckets. You know, I think about line of credit interest. Well, is that a mortgage on personal property? Is that debt on personal property if there's, you know, an all assets lien or something within the loan documents? At this stage, I say the answer is maybe, but practically speaking, you'll be paying that interest on that line of credit regardless. You don't really have to plan for it. That's going to happen. So I encourage you to think about, how do you plan to make sure that you are paying for these costs so that they are costs incurred and payments made. With that, I'm going to turn it back over to Dan to talk about some of the nuts and bolts of the actual calculation.
Okay, thanks, Ben. You know, Ben talked about a lot of important aspects here, and we're going to get back into some ways that you can plan for this, be on top of everything. But one of the big questions we're getting is, how do I calculate this forgiveness? So that's somewhat of the meat of the presentation today. We are going to just spend the next few slides talking about how to calculate the actual forgiveness portion here. So the forgiveness is based on, as Ben mentioned, we've got the forgivable use time frame. That's the 8 weeks from the time that you get funded. So we've got an 8-week spend of forgivable uses that Ben just went through. Those, the occupancy and interest portion of that, you'll see, cannot be more than 25% of the total 8-week spend. This is not initially included in the Act. This is per further guidance presented by the SBA to clarify that. So the idea here is that you can't just reduce wages and prepay rent and all sorts of things like that, and basically have all of your rent and interest and utilities taking a big portion of your 8-week spend. So another way to think about this is, for every $3 of payroll, you can have at most $1 of other costs, the rent, interest, utilities. So in that case, you'd have $4 total, and one of those dollars would be for these non-payroll items. So that's going to be an important thing to keep in mind as you go through here and you look at your spend. because you may have reduced your workforce, you may have reduced your wages, but you probably didn't get a reduction in rent or utilities or interest. Another important point is that your total gross spend here in those 8 weeks cannot be greater than the loan amount. You can spend more than that, but when you start to do the calculation, it's going to be limited to what your actual loan amount was. So you got a $300,000 loan and you had $350,000 of forgivable uses in that period, in the 8-week period, you're really going to have $300,000 there that you use to once you start doing your arithmetic formula here. So the way I look at the formula is I break it down into 3 areas. We have the total forgivable spend, which we just talked about. We're going to multiply that by a forgiveness ratio, and there's 2 different ways to calculate your forgiveness ratio, and we'll talk about those. And then after you have that factor of those 2 items that you multiply together, then you're going to look at another item and subtract it from the answer that you got, and that's a wage reduction factor. So we're going to talk about that as well. So we've got item 1 times item 2, subtract item 3. We're going to go into each of those now. So the forgiveness ratio, there's 2 methods, as I mentioned. And the terminology I'm using here is my own terminology. You're not going to find it in any FAQs. You're not going to find it in the actual act. It just, to me, makes sense, and I think is easy to understand. But the first one is what I'm calling the fractional method. So the fractional method, you have a numerator and you have a denominator. The numerator is the number on top. The denominator is the number on bottom. For your numerator, you're going to take the average monthly full-time equivalents for the 8-week period that matches the spend period. So those 8 weeks are going to be key. That's just where we spent all of our money. We're going to look at the full-time equivalents for that 8-week period. And the definition of a full-time equivalent is based on the definition that came out in the Affordable Care Act 6-7 years ago. And that basically says that someone who works 30 hours a week is a full-time equivalent. Someone who works less than 30 hours a week doesn't mean that they're not a full-time equivalent. It just means that they're a fractional full-time equivalent. So if you have 2 people who work 15 hours a week, they combine to be 1 full-time equivalent. If you have, say, 3 people who work 20 hours a week, they combine to be 2 full-time equivalents because they work 60 hours a week. It's the equivalent of 2 people working 30 hours. Now, it should be noted that 1 individual cannot be more than 1 full-time equivalent. So you have someone who works 40 hours a week, someone who gets overtime is working 50 hours a week. They can only be 1 full-time equivalent if they're over 30 hours. It's where you're under 30 hours that you can start combining people to generate additional full-time equivalents. So that's your numerator. You're going to look at how many people you've had on payroll essentially for the last 8 weeks on average. You're going to then determine your denominator, and your denominator can be an either or. And the nice thing about that is you get to choose. There's not any sort of requirement that you have to go through to use one or the other. It's up to you. And from a mathematical standpoint, you want to use the number that's smaller, because a numerator over a large denominator gives you a small fraction. A numerator over a smaller denominator gives you a higher percent there. So you're going to want to choose the lower amount of these 2 denominators. And the 2 choices are the average full-time equivalents for February 15th, 2019 to June 30th, 2019. And the reason for that is what they're doing is they're comparing to where you were this time last year. So have you increased the number of people that you had employed at this time last year? The other thing you can do is you can look at the 2 full months before this pandemic hit, January and February of 2020. So if you're a company that's been in growth mode and you have a lot more employees, or even marginally more employees in January and February of this year than you did during winter and spring of last year, you're going to want to use last year's number because it's going to get you a more attractive ratio for figuring out your forgiveness. So those are the two time frames you can look at. It's going to depend on which one makes more sense for you as to which one you use. So again, important to note that the lower the denominator, the better the ratio. So that's the fractional method. The other method, instead of just a fractional method, is what I call the 100% method. So let's say I had $100,000 of spend, and when I did my fractional method, I came up to 80% because I just didn't have as many full-time equivalents as last year or earlier this year during my 8-week period. So, but I say, you know what, I'd really like to get 100% forgiveness. So you can ignore the fractional method if you have any wage reduction. Now this is kind of an and or an or, but so if you had wage reductions between February 15th and April 26th of this year, and they're reinstated by June 30th, 2020, you can ignore the fractional method. Same thing holds with workforce reductions. If you had workforce reductions between February 15th and April 26th of this year, and you reinstate those by June 30th, you can again forget the fractional method. Now, if you had both of those, both a wage reduction and a workforce reduction, you have to reinstate both. So it's not just one or the other. But if a reduction was incurred, it must be reinstated. Now, you might say, well, what does 426 have to do with anything? And that's 30 days after the law was signed. So that's what the Act says. They said that the reductions take place anywhere between February 15th and 30 days after the law was signed. So if you have a reduction in May, that may not be applicable to this 100% method. The thing to recognize here, though, is that if you reinstate workforce, so you have someone who left the employment of the company and maybe they're making $80,000 a year, and you hire them back, or you hire someone else back, maybe that person's not available. You hire someone else back to get your workforce and your full-time equivalents back up to what they were before. If the person that you hire at $60,000 instead of $80,000, that probably means that you had a wage reduction. There is a little bit of lack of clarity there, but generally speaking, we don't think that this is something where you can reduce a high paid workforce and bring in a lower paid workforce and still get this 100% method. So just be cognizant of those sorts of things. We're going to get into some other areas where there's some lack of clarity around that 6/30/2020 date, but this is what's called the 100% method. I know this is attractive to a lot of potential folks here that are going to apply for forgiveness. They say, well, how do I get that 100%? Can I bring everyone back by 6/30? And this is how you would do it. So not only do you bring them back, you have to reinstate their wages as to what they were before if you had any reductions. Now, this only covers 100% of the forgivable spend, not 100% of the loan amount. So when people say, oh yeah, I want to do that 100% method, it doesn't mean that 100% of your loan is going to get forgiven. It just means that 100% of your spend is going to get forgiven. So that's an important part there. If you had $1 million loan, but only spent $750,000 of it in the forgiveness period, the most you can get forgiven is $75,000. You can't get all $100,000 forgiven. So we have our spend, we multiply by either the fraction or the 100%, and we have an answer. And now we look at another item, and that's a wage reduction factor. Now, this is going to sound a little repetitive based on what we just talked about with reinstating wage reductions, but this is a whole separate issue. This is what you do here is you compare the wages during your 8-week covered period, the spend period, the forgivable spend period, to the most recent full quarter, which would generally be the first quarter of 2020, because the vast majority, if not 100% of all the applicants here for loans are getting the loan in the second quarter of 2020. So the most recent full quarter will be the first quarter of 2020. This only applies to employees who are under $100,000 a year annually. So you can reduce someone's wages who are above that without any penalty. But if wages are reduced by more than 25%, your forgiveness, that answer that we just had when we took the spend times the fraction, decreases dollar for dollar in comparison to the amounts that are greater than a 25% reduction. So if I have an employee who is making $1,000 a week and I cut them to $700 a week, that's a 30% reduction. So that's more than my 25%. A 25% reduction would have had that person making $750 a week. They're actually making $700. So I had a $50 a week reduction over the 8 weeks, or the 13 weeks, and Ben will get into some of that lack of clarity there. But over some certain time period, that $50 will be multiplied either by 8 or by 13. That will come off of your the factor that we had when we multiplied the spend by the fraction. So that's going to be something that's also important to recognize. So if you're reducing wages, you're going to have a decrease. So in this case, even if you reduce wages by more than 25%, but reinstate them under the 100% method back up to what they were before, and you do that by June 30th, you might get 100% before the wage reduction factor, but you could still have a wage reduction depending on how quickly you reinstate them, if that reinstatement happens during the 8-week period, or how much the reduction was. If you reduce someone by only 20% and then you reinstate their wages back to what they were by June 30th, then this whole wage reduction factor will not come into play. So that's something that if you've had people cut back by, say, a day a week and they're making 80% of what they were before, it'll be something to consider, not just from a reinstatement, but make sure that you're not cutting them, say, another day down to 3 days out of 5, because then the reduction would be 40% and it would come off of the forgiveness amount. So I'm going to turn it back over to Ben now to talk about some planning aspects now that we've gone through the calculation, and I'll be back at the end with some questions and answers.
Thank you, Dan. I'll keep rolling here. Some questions you may need to ask yourself, or you should be asking yourself. One, do I have work for my employees? What you need to think about is what is best for my business, and compare that to what is the best way to maximize my loan forgiveness, because they may not necessarily coincide. There very likely will be some hard decisions here about how to approach this loan forgiveness. If you look at the spreadsheets that we've provided, and again, if you don't have those, please request them. We're happy to send them to you. But one of them is the simple method, and that is set up. We acknowledge that it doesn't cover all the caveats. It doesn't cover all the scenarios. It doesn't cover all the what ifs. But what it does do is allow you to run very simple scenarios and say, well, if I do this and have this, what can I expect to be forgiven? If I do this and have this, what can I expect to be forgiven? So think about that as you think about, do I have work for my employees? It's easier if you have work to do and you don't have to consider that. If you're running the question in your mind, I have people sitting at home, should I just pay them to sit at home? The answer is that you can, but you need to determine if that makes sense to do it. Another thing to consider, with the additional unemployment that employees can be receiving, does it make more sense for them just to stay on unemployment because they could be receiving more? You know, I look at this and think we need to remember that just because the loan doesn't get forgiven, that's not necessarily a bad thing. The best thing may be for the loan not to be forgiven, and you just return it because you didn't need it and you didn't use it for what it was intended to do. That may not be what's best for you, but it may be what's best for some others. Dates to know. I want you all to think about a fact pattern where there's nothing in the act as to when when forgiveness applications are due. There's nothing in the information so far provided by the SBA. There's nothing yet in the Treasury frequently asked questions. However, we have been seeing some language in bank documents. Before we get into that, I want you to think about, if we go back to my example about the $1 million loan, where you spend $800,000 of it during the allowable period for allowable uses, and you spend $300,000 of that $800,000 is during the forgivable period. In the end, you come out with, if we assume that $200,000 of your $300,000 forgivable spend is forgiven, you come out of that with a $600,000 loan, and $200,000 of the loan needs to be refunded. So in that example, though, the $600,000 loan and the $200,000 amount to be refunded isn't going to be finalized, isn't going to be known until after June 30. So if we take that concept and apply that to bank applications that are saying, bank agreements that are saying that applications for forgiveness are due within 10 days or 30 days of the 8-week period. And you may be saying, Ben, was it 10 or 30? Different bank documents are saying different things. It is very possible to likely that that application could be due before June 30. And it also could be before the June 30 100% method reinstatement deadline comes into play. So I am very interested to see how this does roll out. Again, there are loan documents out there that have been signed that say that the applications are due within 10 days or 30 days after the 8-week periods. But practically speaking, that seems to conflict with some of the June 30 realities that will need to be considered to figure this all out. With that said, it would be wise, it would be prudent to plan for 10 days to 30 days after the 8-week period to be submitting an application for forgiveness, acknowledging there may be some open pieces, but that's the information that we currently have. As you consider that, think about that once you submit that application, the lender has 60 days from that date to finalize that application. Once they have made their decision, they then submit it to the SBA, and the SBA has another 15 days to process. So it could be up to 75 days from forgiveness application until you have a final forgiveness amount. So that could easily drag out into the July-August period. So to go back up to a bullet point, you'll see that there is a deferment. The deferment of employer Social Security tax can until notified of forgiveness. What that is alluding to is that if you are taking advantage of the opportunity to defer your Social Security tax remittance under the allowable means that is currently available, you can still do that if you receive a PPP loan. So you can receive a PPP loan and still defer your Social Security tax remittance until you have been notified of forgiveness. So you can continue to defer, but the day that your lender says that they have approved your forgiveness application, you may no longer defer any additional Social Security tax remittance. It doesn't change what you have already deferred. That continues to proceed as it is set up, but you can no longer defer any additional payments once the lender has made their decision on your forgiveness. It's not the SBA processing it, it's your lender making their decision. So that's something to keep in mind if you're taking advantage of the deferment of Social Security tax. Some other planning items to consider as we move on to the next slide is that we encourage you to read your PPP loan documents. It has been pleasantly surprising to see how relatively simple they are. They are readable. When I think about traditional loan documents that have guarantees, they have security interest, they have collateral, they can be extremely lengthy and extremely cumbersome to try to read. Thankfully, what we have seen so far for these PPP loan documents, they're not that complicated because they don't have guarantees, they don't have collateral, they're fairly straightforward. So with that said, they are readable and we encourage you to read them. There are different things within them depending on the bank that you will need to consider. We would be happy to read them. We would welcome you to send them to us because it allows us to see what is in them. And if we get something complicated and we need to talk to an attorney about it, then we can do that just to make sure we're clear on what you need to do, what we need to do to support you. You know, an item within some that we've seen is that the requirement, the borrowers commit to acts that would maximize the forgiveness by retaining their workforce and retaining wage levels. There's nothing in the act, the SBA guidance, or the Treasury facts that points to that, but it is in loan documents. So the question becomes, how do we do that? Why do we need to do that? But it needs to be considered. So we encourage you to read those documents so that they can be considered. Another planning tip that you can do, as Dan alluded to in the fractional method, the denominator on that is based off of full-time equivalents between February 15, 2019 and June 30, 2019, or January 1, 2020 through February 29, 2020. Both those dates are in the past. Those full-time equivalent amounts can be calculated now, and we would encourage you to do so. Under the premise that this could get hectic at the end, figuring everything out, if you can nail down things that you can nail down now, it would be prudent to do so. And not only calculating them, but substantiate it. Come up with the support for those numbers. Don't just calculate it and say, this is my number. Make sure you have substantiation for it. In a little bit, we're going to talk about documentation, and that's going to be important. Be prepared to react to clarifications. I think many of us got good at this a week and a half ago, where we thought that this is what we were supposed to do, and then something new came out and that got changed. And then we thought we knew it again and it got changed. We had to react to clarifications relating to the application process, and we very likely will need to react to clarifications on the loan forgiveness. So be prepared to do that. Start tracking your expenses. As we mentioned, the allowable use period starts on February 15th through June 30. So you're allowed to use the loan proceeds for expenses for allowable uses between February 15 and the date that is until current. How you use loan proceeds to pay for things that are already paid, I'm not sure. We are waiting to see what that mechanism will be. But you can start saying, hey, my payroll expenses from February 15 through now were this, and this is my substantiation for it. My rent was this, my utilities were this. Gather those invoices, gather that support, get that together now so you don't have to do it. Because if the reality is that you're supposed to submit this for forgiveness within 10 days of the end of the 8-week period, it could be challenging to come up with all the information in that 10 days. And the more that you have accumulated ahead of time, the more that you have accumulated as this has processed, the better off you will be at that time. Unclear portions of the law. So these are some things to consider as we've read them, where we've been able to say, well, what about this? What about this? We want you to be thinking about it as well. Rent. There's been many questions. Is related party rent allowable? We have seen nothing that excludes related party rent, so we are assuming that it is an allowable use, but it must be paid under a lease agreement that was in place as of February 15 in order to be an allowable use. Another thing to consider, rent appears to be for both real and personal property. It does not specify either way. It says rent paid in accordance with a lease agreement in place. So we are believing that that includes both real and personal property, but that there may be additional guidance coming out about that. But at this stage, there's nothing precluding personal property. There's some uncertainty regarding capital leases. So your operating lease on a building seems pretty straightforward. That's for sure included. But what about, a capital lease on a piece of equipment? Well, we can say, based off of the bullet point above, that an operating lease on a piece of equipment, that would be allowed. Shouldn't a capital lease be allowed? And we are interested to see if there's guidance on capital leases, because there is a prohibition of using the loan proceeds to refinance debt. So if the determination is made that by paying capital lease principal payments, you are paying down debt, it would seem like that would not be an allowable use. Although in that circumstance, based off of the interest definitions in the Act, at least the interest piece of a capital lease would be allowable. So at this stage, as it relates to capital lease, worst case scenario, we're thinking you can include the interest. Best case scenario, you can use the full amount. We're waiting to see. When Dan talked about the salary reductions and the 25%, he alluded to that it would be comparing the 8-week covered period, the 8-week forgivable covered period, and comparing that to the most recent quarter, which is a 13-week period. There is nothing in the Act that talks about prorating either 8 weeks up to 13 weeks or 13 weeks down to 8 weeks. By nature of 13 to 8 being a 30-some% reduction, we don't think it makes any sense that one of them won't be prorated. As we built our spreadsheets, we prorated the 8-week up to 13-week, assuming that that will be the case. However, we want to acknowledge very clearly that that is an assumption. There is nothing authoritative that says that is the right thing to do. However, practically speaking, it seems like it would be the only thing to do. And we are prorating the 8-week up to 13-week to be conservative, because that would potentially calculate a larger gap than if we took the 13-week down to 8-week and determined what the differential was there. But wanted to make that clear, because the way the act reads, you're supposed to compare 8 weeks to 13 weeks, which just doesn't make sense in our minds. An additional unclear portion of the law, with the 100% method, Dan alluded to this. It says reductions must be reinstated by June 30, 2020. There's no word on how soon before then they must take place or how long after them they must take place. That is something that it for sure seems like guidance must be coming, because that is a big deal. If you are calculating a fractional calculation of 30%, and your loan forgiveness is being reduced by 70%, you're only getting 30% of it, and you can hire people back on June the 25th and let them go again on July the 3rd and get 100%, that could be hundreds of thousands of dollars for many of you. So that is a huge deal. We expect there to be guidance, whether that be how to prove that they have been reinstated, how to prove those reductions have been eliminated, or how long they have to be in place. It seems like there needs to be something about that coming, but it has not come yet. But that is a gigantic, unclear portion of the law that has incredible impact for some of you. In general, the incurred and paid, they definitely are trying to keep people from prepaying amounts, which makes sense. They want to make sure that you're not paying for 4 months worth of rent or a year's worth of rent during that period. That's why they want the lease agreements to have been in place on February 15, so that you can't jack up your lease agreement and pay a bigger amount and get it forgiven. They're trying to keep that pretty straightforward. And like I said, paid and incurred is pretty straightforward. How to make sure that payment happens could be difficult. We want you to be prepared to running a special payroll to potentially make sure you're getting as much of that 8 weeks as possible. We want you to think about contacting your group health insurance provider to make sure that you can get 2 payments made within that period, and that those are covering the 8-week period. So be thinking about those. Hopefully there's guidance that comes out that allows that position or that approach to be nullified, but we're not aware of anything at this stage. Another thing, penalties for the misuse of proceeds. Maybe you do not remember, but I will remind you, when you signed your loan application, whoever signed that loan application certified that all SBA loan proceeds will be used only for business-related purposes as specified in the loan application and consistent with the Paycheck Protection Program rule. Additionally, the funds will be used to retain workers and maintain payroll or make mortgage interest payments, lease payments, and utilities payments as specified under the Paycheck Protection Program rule. I understand that if the funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as for charges of fraud. Please be careful with how these proceeds are used. If you unintentionally use them for something you're not allowed to use for, at this stage it appears that the worst they will do, the biggest step they will take, is to require you to repay them, which could be difficult if cash is tight and you have spent it and you don't have those funds. But I think they're going to be of the mindset that we told you what you could use this for, and if you used it for something other than that, then you need to pay it back, because we're assuming that it was only to be used for allowable uses, and therefore if it wasn't used for allowable uses, it's still there to pay us back. But if you knowingly use it for unauthorized uses, they go to the extent of fraud and fines and jail time. So please do be careful with how you use the proceeds. Lastly, the documentation requirements. I am an inherently conservative person, so this comes into my wheelhouse. I believe there are times in life where we want to be conservative, and there are times in life where we want to be aggressive. Many of you as business owners have been successful because you're aggressive. This is a time where I encourage you to please be conservative as it relates to the documentation requirements. More will be better, it seems. You could go as simple as just accumulating general ledger information, but I would encourage you to keep copies of canceled checks, keep copies of amounts clearing your bank, keep records of invoices received, keep records of whatever you can do. The last thing you want is to get to where you submit your forgiveness application and it is limited because they determined that what should be a forgivable use is not forgivable because the documentation is not sufficient. The Act explicitly says that forgiveness is prohibited without documentation. What documentation there will need to be is to be determined. We hope for additional guidance there, but on this stage, I would err on the side of being conservative, gathering as much as you can so that you have it. There are some banks that have required borrowers to set up additional bank accounts, separate bank accounts for these funds to go into. We're not necessarily recommending that you need to do that, but acknowledge that that kind of gets to the heart of, if you put it into a bank account and you can track every single penny that comes out of that bank account, it is easy to prove what those funds were used for. So how can Walz Group help? As I said, we have spreadsheets that are available to help with calculating the forgiveness. If you don't have that, please ask us for it. We're happy to allow you to use it. We can provide guidance on interpreting the CARES Act. We have received plenty of questions, and I expect we will continue to receive questions. And a lot of them, you know, at least in the interim, the answer is going to be, we're not sure, this is what we do know. As we get further along, there's going to have to be some discussions around, okay, we have all the guidance, now how do we interpret it? And how aggressive do we want to get on interpreting that guidance? We can help with calculations of full-time equivalents for past applicable periods, and also as we go forward, we can help run scenarios for future periods. Like I mentioned, what if I do this? What if I do this? How will that work out? We can help with that, and we're happy to help with that. We want to be here to be helpful. We're working very diligently to make sure we're staying up on this as well as we can, and we welcome your feedback on that, and we welcome your questions and how we can help.
We've had a number of questions that have come through. So I've answered some of them directly. Not being able to speak has given me an opportunity to respond to some of these questions. The question that's up now is, have you seen any details on minister's housing allowance as part of payroll expense? I would say that is a good part of, that would be allowable as part of payroll expense. Housing allowance is typically a tax treatment issue, not a pay issue. So I think that would probably be allowable. A couple of other questions that we had on here. Is overtime included in the calculation for full-time employees? So if you had an employee who worked 10 hours of overtime, a full-time employee, you can only be one full-time employee per person. So an employee who works 30 hours or an employee who works 60 hours, they're each only one full-time employee. So overtime will not help in terms of calculating full-time employees. It will help with your forgivable and allowable uses, because you'll have more wages paid to that individual, but it will not increase your FTE count. There's a question about how do you prove FTE loss and or wage loss has been eliminated or restored, and Ben touched upon that a little bit. There is going to be a lot of clarification that's needed in terms of how we're going to document what comes out of this in terms of applying for forgiveness. The loan application for most of you was hopefully not too cumbersome. The actual application part was only a couple pages, maybe depending on your lender, you had to add different levels of support, but the application wasn't that bad. We anticipate that the forgiveness application is going to be much more difficult, which is why when Ben said document as much as possible, that is really good advice, because there is, we can anticipate with there being so many aspects of how this is calculated, and FTEs over a certain period and elimination of workforce and restoring that, or elimination of wage cuts and restoring them. There's a lot of information that you're going to have to share there. So we really anticipate the application for forgiveness looking ugly. So that's why it's important to have as much documentation as possible. Someone asked, could wages actually be increased in order to use up all of the money given in the loan? Would that still be forgiven? Yes, I think you could increase your wages, but your total forgivable portion before you multiply by a fraction and before you take any salary reductions, which in this case may be moot, cannot be more than your loan amount. So if you have a $200,000 loan, and you end up with $220,000 of wages in that 8-week period, you can only use $200,000 there. So assuming that your FTEs are greater and that your fraction is 100%, then using those additional wages or increasing the wages will allow all of those to be forgiven. But you could end up, depending on your situation, if you don't have a whole lot of revenue and this loan is your main way of generating cash inflow to your business, you have to make a decision about whether or not increasing wages makes sense for your particular business. There's been a lot of questions about, can we delay the start of the 8-week period? And for most of what we've seen, the 8-week period starts the day the loan is funded. And we got notice from our bank, can we delay when that loan gets funded? Most banks, and I don't recall offhand if this is an SBA requirement or if it's just what the banks are doing, almost every bank that we've seen has said 10 days. Basically, you can delay for about 10 days. You get notified that you've got an SBA number, you've got a loan number. Say that happens today, you should have the money in your account by in 10 days. So I know, given the uncertainty that we have right now, it would be great if you could give it a little bit of time and wait for that 8-week period to start so you could put together a better plan. Unfortunately, from everything we've seen, that's not possible. So perhaps depending on the bank or the lender, it's possible to have a little bit more than that, but generally speaking, it doesn't seem like they want to have lengthy delays here between the time that you're approved and the time that you get funded. So that takes us just about to an hour here. We do have some other questions that are open. At this point, we're not going to get a chance to respond to all of those via the conference call portion here, but we do have the names of the people who submitted those questions, so we will respond to you there. And like I said, we will have this recorded, and the slides will be available. I know some of you have sent emails and sent questions in with your email address asking for the slides. We have record of everyone who signed up. We have record of your email address, so we'll make sure you have the slides for this, and we'll make the video recording available as well. So you can see on the screen, there's, if you don't have a question right now and you think of one later, you can see the contact information for myself and for Ben. Email us at any time, even if you're not a client. If you're one of our referral sources or a friend of someone who was invited and you hopped on, feel free to send us an email. We will be glad to talk with you about it. You're also welcome to call the firm number there at the bottom, and we will be glad to talk with you. So thank you all very much for your attendance. Again, we know this is a really difficult time for many of you. Hopefully you found this time useful, and we hope that we can continue to be of service to you as you continue to navigate the CARES Act and all things coronavirus related. Thank you again. We appreciate you. Thanks.